So what are the RSI filtered Fast 50 stock pairs and what can they do for you? We're going to take you through an example here, FOXA versus NWS, and talk to you about how we create these and what they can do for your trading. Once you make the decision to join the Pear Trade Finder community, like thousands of traders before you have done, your next question is going to likely be, how do I find profitable pairs to trade? Well, you can relax, not too much because it's still trading, but we've done the heavy lifting for you. Our team invests hundreds of hours every 2 to 4 months to create and recreate a trampoline for you to spring into action when you first subscribe to Pear Trade Finder Pro. It's a weapon in your arsenal to help you rapidly achieve consistent profitability in your pair trading. We have preloaded into Pear Trade Finder Pro a group of 50 RSI filtered US equities pairs we have carefully curated. I'm going to take you through how we do that in a second. These 50 pairs in backtest over the last year have generated trading signals that show 112 closed trades, a 97% win rate. The average win, this is based on $5,000 a leg size, so to hold a $5,000 a leg pair trade you need to put up about $2,000 of margin. Okay, so the average win was about $345, average loss was about $100. That's a reward risk of 3.4 times. And over the course of the year with those 112 trades, the total net profit was about $37,000. And the hypothetical account size you would have need to have had to hold those trades was about $27,500, again, based on that $5,000 a leg size. That translates into about 8% per month, back-tested results. So I'm going to revisit a slide that was in the video that we sent to you on Tuesday about what is Pear Trade Finder Pro's RSI filter and how do we use it in reversion to mean trading. So when we're pair trading, we are reversion to mean traders. We're waiting for the spread or the price ratio of the price of two securities which are fundamentally correlated, co-integrated, and correlated to go way out of whack for some reason. Okay? And if it's not a value shifting event and they've gone out of whack, we then arbitrage it back to the mean. So we go long the weak pair, the weak symbol, and we go short the strong symbol. That's what we call arbitrage. And we do that when the irrational pricing in the price ratio has gone way out of whack. So, but how do we know when it's gone far enough? That's the hardest thing for a reversion to mean trader, because if it keeps going after you put your arbitrage on, you're going to get into very painful losses and things can trend and those losses can get very big. So you want to catch the mean reversion without getting swept away. How do you find the balance and time a good entry? It's kind of like, and that's why we have this photo over here on the right, it's kind of like watching a wave crash on the beach. You're trying to identify the moment the wave reaches its furthest up the sand and turns around and runs back down. Because if you arbitrage here and the wave is flying in, it's going to take you and leave you way up on the beach. And if you sit here waiting for it and it doesn't get here and it goes back, you didn't get a trade. So how do you time this so you're getting it right when it's going back in? So enter Pear Trade Finder Pro's RSI filter. Relative Strength Index Oscillator was developed by famed technical trader J. Wells Wider in 1978. Okay, it's been making money for traders ever since. It's a momentum oscillator and it measures the speed and change of price movements. It oscillates between 0 and 100, and traditionally the market is considered overbought, i.e. potentially really high on the beach and about to turn around, when the RSI is above 70, or oversold when below 30. With your PTF Pro, extremes can be set to whatever you want in this filter. You can put them at 80-20, 70-30, 85-15, depends how aggressive and what smaller size trade set you want to achieve. And as price ratio reversion to mean traders, we use the RSI to determine the strength of the trend in the price ratio of a stock pair and to help predict how likely its trend is to change. Okay? So, like most trade management techniques, there are pros and cons of using the RSI filter. But most importantly is this one here for protecting your downside. So by waiting for the RSI of the price ratio to reach an extreme before triggering an entry signal, even if you're at plus 2.7, plus 3, plus 4 standard deviations and your entry stretch criteria has been met or exceeded, we can hope to avoid painful early large losses that can occur if we've moved to arbitrage the mean reversion before the irrational pricing momentum begins to subside. So we time it better and therefore get lower maximum drawdowns. And by entering as close as possible to the point of maximum price ratio excursion, profits are increased, even if the same number of trades are recorded. Why? Because we're getting in at a better entry, and we're getting a lower drawdown and therefore a higher profit. So this is kind of like waiting for a poppy to grow above all the other poppies, and we only cut the tall poppies. And that can significantly improve the reward risk of a pair trading system. Most importantly, for me at least, psychologically, this tool can really help trader confidence and avoid panic closing of trades in a loss that later revert for profit. When that happens, it's soul crushing to see a trade that went way deep into a loss. You close it out at a max loss, stop loss, and then it turns around and closes at a profit. We want to avoid that because it will make it very difficult for you to trade this system. Now there are some cons, obviously. You get potentially fewer trades per pair, and you get missed opportunities. There are good trades that don't go to an RSI extreme and turn around and create a profit for the trader, and you'll miss those ones, and you may have fewer trades as well on any given pair. And finally, and this goes back to the wave analogy, basic filter, RSI filter, doesn't identify divergence. And divergence, we've talked about many times in our videos, is a signal or a technique on a chart, and we'll go through that in a second, which can identify the moment when this wave has come all the way up and is about to turn around and go back down. Not perfectly, but it does increase the probability that that's happened. Okay, to show you why this what this RSI filter can do for your pair trading, let's deep dive into how we create the RSI filtered Fast 50 with an example pair. Today, thanks to Rupert Murdoch, we're going to look at FOXA Corporation versus News Corporation. FOXA spun out of News, I think, back in 2013, and they trade independently, and they're very similar companies. So let's have a look. So what do we do when we create the Fast 50? Well, here we are in Pear Trade Finder Pro. The first thing we do is we would download our tickers. You can do that automatically now from the top toolbar. You would hit NYSE, NASDAQ, Amex, hit download. PTF Pro will automatically pull this down from our servers. And this spreadsheet, all the US tickers in the spreadsheet are updated on a daily basis after the close. And we like to trade off of this one, the cap mid over. And so you would go down here and you can see we've done a filtering. This is very important. It's one of the first filters we do as part of creating the filtered Fast 50. We have filtered all of these tickers by minimum market cap of 2 billion and minimum average daily volume traded of at least $2 million, so that they're liquid and you can short them. So we've done that. You would go down and you would find your industry subgroup. For example, these two, Fox and News, are in the broadcasting industry subsector. Okay, so you would copy these tickers, simple enough, and you go to Pear Trade Finder Pro, and you would create a group. You hit create group, and you put all the conditions you want in your backtest. I'm not going to do this live because I don't want to spend the time in a video doing something you can do yourself. But importantly, in the backtest and signal settings, you would hit RSI settings, and you would activate the RSI ratio RSI filtering, activate, deactivate. Here you can set the days look back you use to calculate the RSI, and your max and your min. You can do 80-20, 70-30, whatever you like. Okay, so that's been done for the broadcasting group. And what came out of that? Well, you backtest every ticker against every other ticker, and this is what came out with Fox versus News. Okay, so 2-year backtest. There were 5 trades. They were correlated at 55%. They were highly co-integrated, 0.99, which means there's a p-value of 0.01. Okay, the compound annual growth rate of your capital, if you just left it in that pair over 2 years, was 16.7%. Your maximum drawdown was 9%. You had a gross profit of almost $2,000, net profit of $1,800, $362 per trade, and average and percentage of winning trades was 80%. So 362 on an average trade, and you are putting $2,000 at risk when you're using 5-to-1 CFD leverage. So that's about an 18% return on your margin. And I think the average trade duration, we can see that if we like, It's about 17. I don't see it here. Don't know why. There we go. 16.4. 16.4 days in trade on average. Okay, here you have the P&L curve, and you can see the first trade was a loser, but then every trade after that was a winner. And what's very important is there's very little drawdown on these trades. That's what makes it such an attractive pair. See the ratio chart. Not so great in this section, but very good in this section and very good in this section. Lots of zero crossings, flat ratio, back and forth across the moving average of the ratio. So that's why we chose this, and these are the screenings that we look for. We like to see at least 4 or 5 trades. We like to see it co-integrated, correlation of at least 50%, compound annual growth rate in excess of max drawdown, so you've got a positive reward risk. We want to see at least about 200, 250 per trade. This one's well over that, and we want to see at least 70% winning, and this one's at 80%. So all of the filtered Fast 50 have similar characteristics to this based on those filters I just mentioned to you. So you would then go and save this to watch list, and then you would want to know whether or not it is a fundamentally correlated pair, besides providing a very good backtest. So you would pull up our parametrics. This is our fundamental screening snapshot tool, and it's just calculating for a bit here. And what we can see is you got FOXA Corporation versus News Corporation. They're both in the communication services sector, both in the broadcasting industry subsector. Your price ratio is about 1.5 to 1. That's great. They don't show the betas here. Market cap very close. Let me bring that back. Market cap very close. 20 billion versus 13 billion. And they're valued pretty similarly. The overall franchise EV to sales of 1.7 versus 1.5. EV to EBITDA of 6 versus 12. Don't have a price earnings on news. And we can see again this franchise value, price to sales almost identical, 1.6 versus 1.4, and price to book 1.9 versus 1.6. So very closely valued, very similar dividends as well. And you can get the company description. You can see that News Sports Entertainment company in the United States. I think most people know what FOX Corporation is, Fox News and the like. And News Corporation does Barron's, Market Watch, Dow Jones Newswire, Wall Street Journal, Factiva, a lot of overseas press as well, Sunday Times, Daily Telegraph, and so print, and this is broadcasting. What we can see is that they provide a very, very nice pair to trade. Now, finally, what I want to do on this pair before we move on, and I'll give you a summary of everything that the Filtered Fast 50 did this year. We're going to look at one specific trade here because I want to show you how the RSI filter protects you. So this trade that triggered on the 12th of February. Okay, this trade triggered, and at negative 2.89 entry stretch. So over here is our plus minus chart, and you can see this is when it triggered on the 12th. However, you can see that because our trigger was 2.7, it was in trigger on the plus minus chart. Okay, so our standard deviations, it would have triggered any of those days, and you can see that here, minus 3.66, minus 3.18, minus 3.06. However, because you had this RSI filter in place, none of those triggers worked because it wasn't at an extreme, and it wasn't until it closed here on the 12th that you were given an entry. And look what happened here. So this is the actual ratio. This is what you're trading. So the first one was called, would have been called without the RSI filter on the 9th. That would have put you in right here. So you would have entered here, taken a big loss, and then finally exited at about where you entered, probably made no money. Instead, because the RSI filter was in place, didn't trigger, and then finally it triggered here. That got you in right at the right moment, and then it reverted, and you made $393.59. So I hope you guys can understand that. That's how the RSI filter works to get you in at the right moment versus at the wrong moment. The other thing you can look at, and I mentioned it briefly, very important when doing reversion to mean trading, is divergence. So here our ratio is doing a lower low, so at one low and then a lower low. And if we look at the RSI chart, especially when the entry happened, you have a low and then you have a higher low here. So this was doing this upward sloping, and this was doing downward sloping. That's called divergence, We always like to see that in our trades. We believe that that suggests that the wave has gone all the way up the beach and is about to run back down. So that's how we use the RSI filter in PTF Pro to improve your risk-reward results from your trading. So let's just take a quick look at the summary results. So we've applied that methodology across 2,200 US tickers across all the industry subsectors, and we've come up with the filtered fast 50. Over the last 12 months, up to 7th of September when we launched this promo, we had 112 trades, 37,249 profit, 109 winners, 3 losers. Like I said, 97% win rate, about 3.4x reward to risk, and your average days in trade about 17 days. Well, what does that mean? If you assume that you're holding about 11 trades at any one time, max capacity, we can add another 25% on top of that as headroom, would mean that you'd need about $27,500 of equity capital to be able to hold the nominal value required for those 11 trades, and that assumes a 5-to-1 CFD leverage at IB. Okay, there was 37,249 of profit. You had to pay about 786 for the margin, so your net was 36,463. And that equates to about 133% per annum, 8% per month. That's where we get that figure. And what you can see in this group is they're all 2-year look back. It's plus or minus 2.7 entry, plus or minus 1.0 exit. We have 100 different tickers in there. There's no duplication, and there are over 30 industry subsectors, so you have good diversification. Please watch out. There's some higher volatility pairs in there. We always like to make sure the vol is below 4%, preferably below 3%, although that changes over time. So if you're over that amount, please position size accordingly. Cut the size back from 5,000 leg to lower. And always remember, don't trade raw signals. Check the news to filter out signals deriving from fundamental value shifting events, and avoid trades right before earnings releases and dividend dates. So there you have it. That's the Filtered Fast 50. That's our example pair, Fox News versus News Corporation. And happy trading, everyone.